Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Monday, February 12th. Let's take off. First up, Bitcoin pushes through 50K for the first time since late 2021. The world's largest crypto has more than recovered since tumbling below 40,000 in the initial days following the opening of the spot ETFs. 50K is kind of an interesting psychological level. It's the only reason I'm touching on it. It kind of shows that the ETF demand is sort of stabilizing here, and we're seeing this idea of steady accumulation. As Bitcoin has this concept of absolute scarcity, I think the market's going to continue to sort of process that. And I don't think the market's ever actually seen an asset with absolute scarcity before. So I think this is going to be quite an interesting experiment as it all plays out. Next up, Kraken and other crypto giants decide not to run Super Bowl ads. US-based digital asset exchange Kraken and other crypto firms reportedly decided not to buy advertising space for the biggest marketing event of the year. Fox Business reports that most major crypto companies decided not to run commercials during the San Francisco 49ers and the Kansas City Chiefs match at the Super Bowl event on Sunday. Kraken Chief Marketing Officer Mayur Gupta says the Super Bowl may not be the best avenue to reach the next generation of crypto users. The Super Bowl is a very US-centric event, and the next wave of crypto users will come from all around the world, not just the United States. And the last wave of crypto marketing was all about hype and FOMO. This current wave has to be rooted in education and awareness for the substance and true value proposition of crypto as a movement that will bring financial freedom and inclusion. I really love this quote here from Mayur Gupta. I think it really captures the essence of sort of what I believe. And I think the reason I sort of highlighted this is this idea that the future of Web3 and crypto is not just US-centric. I think is very important for people to understand, right? A lot of the use cases for Bitcoin and for cryptocurrency are going to be first felt in third world countries and in countries where they really do need this sort of decentralized asset, this separation from money and state after multiple bouts of hyperinflation, abusive government regimes, all of this stuff, and all of the promise of Web3 and Bitcoin will play out there first in a lot of ways, right? And US, as we've seen from our current administration here, pushing development talent and people offshores and really being antagonistic to the industry itself and to the future of the technology that crypto and Web3 offers, right? So this quote here that the Super Bowl is a very US-centric event and the next wave of crypto users will come from all around the world, not just the United States, bakes in a lot of that negative political activity that's occurred from the current admin and the current people in power here in the US. And the fact that a lot of United States companies have chosen not to advertise the Super Bowl, I think there's sort of a reason for that. And I think this sort of captures the essence of where crypto stands in the US. And it's honestly very sad. There's so much wealth will be created, so much jobs that will be created. There's so much development that needs to be done. You know, it's sad to see the US not the preferred option for that, right? Because historically we've been the center of innovation, the center of progress. And I think we're on a path currently that does not track well with that trajectory when it comes to Web3 and crypto. I also love this idea. Mayur Gupta says we want this current wave of adoption sort of to be rooted in education and awareness for the substance and true value proposition of crypto as a movement that will bring financial freedom and inclusion. I think that's some powerful stuff and very well thought out statement there. Next up, Crypto.com says big money Formula 1 UFC deals paying off as user base expands. Crypto.com has found itself at the front and center of major fan bases in the world of Formula 1 and the Ultimate Fighting Championship UFC through lucrative sponsorship deals that have helped drive the cryptocurrencies exchange's growth. We've been fortunate to find these amazing partners, F1, the UFC, working in LA with the Crypto.com arena, and AEG. I think this is interesting because to kind of follow up on this theme of action sort of happening out of the United States, UFC has a sort of global viewership base. Although a lot of the fights take place in the US, there's this global appeal where you have athletes from Russia, Africa, from Brazil competing in the UFC. So it's got a much more global appeal, which sort of falls in line with where these crypto companies are spending their advertising budget, right? They're trying to reach this global audience as opposed to just the US audience. And I think this tells a lot about what's been happening in the US. Here's another story about a up-and-coming crypto-friendly city. Can Torrevieja become Europe's first crypto-friendly city? Torrevieja, a tourist hub in the Alicante province of Spain, will allow stores to accept payments in crypto, paving the way for greater adoption. Torrevieja, a tourist hub in Alicante province of Spain with a population of 82,000, intends to become the first crypto-friendly city in Europe by letting its stores accept cryptocurrency. Looks like here they have this ambitious digital transformation project, a collaboration between the Department of Commerce and the Association of Small and Medium Merchants of Torrevieja. To transform Torrevieja into a crypto-friendly city in Europe, the local government and businesses will digitize local commerce using blockchain technology. I think this is awesome and fascinating. It looks like they've got their local counselor for commerce, Rosario Martinez Chazara, expressed her hopes that the measures will incentivize crypto owners. She also indicated that the University of Alicante will launch special digital payment courses for local businesses. I think this is fantastic. You're really seeing this idea. I think last week we spoke about, I think it was Singapore, Hong Kong, that sort of had these sort of special business zones, these special economic development zones for this type of talent. And we do see a lot of developers and interested parties going to those areas, right? And bringing capital with them, bringing ideas, bringing, brain share. Where historically the US was the place that we would attract this sort of brain share and all of this talent. Now we're seeing it sort of flow to all these other countries that are incentivizing this adoption, incentivizing bringing this, these talented developers and people in the industry in, right? Even in El Salvador, we see Bitcoin Beach, we see these places. There's going to be a Bitcoin City, right? So high net worth individuals will flow to those places. Developers will flow to those places. People are going to go where they're treated well, right? Where their value is appreciated, right? And right now that place is not the United States, and it's sad to see. To further sort of hit on this point, SUI Foundation launches Blockchain Academy with UAE University. The SUI Foundation's Greg Ciaronis shared that even 7 out of 10 students in an idea presentation event had blockchain as a part of their solutions, right? So the UAE, the United Arab Emirates, they're opening schools to sort of teach about blockchain, a blockchain academy with this SUI Foundation managing director. Again, other places, other countries are attracting the talent. They want the talent. They want the jobs. They want the tax revenue. They want to be the forefront of this next, sort of revolution. In inflation-torn Argentina, locals use crypto caves and avoid Bitcoin. So this is kind of interesting little take here, right? It looks like this is still potentially happening here. Argentines are using black market exchanges known locally as crypto caves to buy United States dollar stablecoins in a bid to escape strict currency controls and the triple-digit inflation of the Argentine peso. Argentines are also reportedly shunning Bitcoin due to perceived volatility. Here's a quote from Guillermo Escudero. It is not a normal commercial place with public attention. They are hidden places where one goes with prior confirmation to meet and can change their local fiat money against cryptocurrencies, mostly USDT. It's interesting to see that this is still occurring with Javier Milei, like in office. I know he's committed to sort of, open, transparent free markets. So very interesting, right? And it's also interesting that Argentina wants, they're so used to hyperinflation that they sort of just want, this dollar. The dollar is sort of what they're looking to have. And, the blockchain and these stablecoins allow these other countries to purchase and hold digital dollars, right? And it gives them this idea of decentralization where they can sort of hold USDT on Ethereum's blockchain and sort of hold these tokenized versions of the dollar. And, they sort of have this decentralized ownership where the government can't confiscate it. Nobody can steal it from you. And you have true sort of self-sovereignty, right? So I think it's an important tool to have, right? And I'm sure there are some people, buying and holding Bitcoin as well to preserve value over time. But these people need to hold value from month to month, and they need to spend from month to month, right? So the dollar is still the unit of account for the world, right? And for all commerce, and is still sort of denominated in the dollar. We don't know how that's going to play out over the coming decades, but currently, that is the status quo. Here's an interesting sort of quote from a guy named Rich Kane. I lived in Argentina from 2014 to 2017, where I had to go to a cave each month to illegally sell my pesos to buy USD, just so I could guarantee a flight home each year. Anyone who doesn't understand why crypto DeFi is revolutionary is living under a rock. And I agree with that statement, right? And here you can sort of see the hyperinflation sort of playing out. This, I guess you wouldn't call this maybe not hyperinflation, but massive, 90% plus reduction in the value, the purchasing power of the Argentine peso over just, less than a decade, right? So that's pretty massive devaluation. And I'm sure if you put that in Bitcoin terms, it would be like a 99.9% devaluation. Crypto caves emerged from financial caves, entities that previously operated as public money exchanges, but went into hiding when Argentina brought in currency controls in the 1980s. It led to the blue dollar, Argentina's unofficial and informal dollar rate, which currently offers locals 1,115 pesos for $1. Wild. In December 2023, the official rate hovered around 365 pesos to the dollar, but has increased to 829 pesos since economist Javier Milei became the country's new president, Argentina's inflation rate hit a 32-year high of 211% in 2023, according to the latest January 11 figures from the country's statistics agency, the National Institute of Statistics and Censuses. Escudero said some crypto caves have been investigated and even raided by authorities. However, the crypto caves don't give off a bad image to locals, as they're one of the few places they can trade away their inflation-ridden pesos. Fascinating. Next up, Joe Biden posts laser eyes meme after Super Bowl, but it's not about Bitcoin. He probably has absolutely no clue about anything, honestly. He probably didn't even do this post. But I do think it is very clever. It's a clever sort of little marketing thing here. A lot of people know about the laser eyes in the Bitcoin community, but I'm sure he had no clue about that. But what he was doing was leaning into this dark Brandon meme to reference the conspiracy theory that the Super Bowl would be rigged to ensure that Taylor Swift's boyfriend Travis Kelce's team would win, so that the pop superstar could then endorse Biden for president. So I think it was sort of clever of him to sort of lean into this, or his handlers or his media people to sort of lean into this thing and make a joke about it. So very funny. But let's not be confused here with the fact that this current administration has not been good for crypto and have sort of attacked it behind the scenes at every chance they've gotten, right? And then also publicly, right, with people like Elizabeth Warren and Sherrod Brown constantly posting stuff that is just factually incorrect, pushing and spinning propaganda and doing all this nonsense to attack the industry. Gary Gensler, another example, right, who sort of sold his soul to the devil and sold his soul to Elizabeth Warren for that appointment. Here's a funny one, a post by Whale Panda. Wow, this is a whole new level of cultural appropriation, right? Sort of appropriating this Bitcoiner thing. According to Coinbase's nonprofit, or here I'm going to just highlight this, which is kind of what I said. It's worth noting that the president has not endorsed any policies that slant in favor of Bitcoin or cryptocurrency more broadly, making it extremely unlikely that Biden would post endorsing a particular crypto asset. According to Coinbase's nonprofit advocacy organization Stand With Crypto, Biden is listed as being against crypto, having made 5 public statements that skew toward a negative stance on digital assets. Let's move on. Less than 10,000 blocks to the next Bitcoin halving. Why Grayscale says this one's different. The countdown to Bitcoin's highly anticipated halving event is on, with fewer than 10,000 blocks left. According to the Bitcoin halving clock, approximately 9,843 blocks remain before the event, which is estimated to occur by April 17th. So some interesting sort of thoughts here about miners and supply issuance and, the reduction in supply issuance that comes with the halving. Despite minor revenue challenges in the short term, fundamental on-chain activity and positive market structure updates make this halving different on a fundamental level, Grayscale wrote. ETFs in general create access to Bitcoin exposure to a greater network of investors, financial advisors, and capital market allocators, which in time could lead to an increase in mainstream adoption. So this is sort of this concept and idea of now there's this new buying pressure that is structural that's been created by allowing these ETFs, right? So investment advisors and people that are managing people's money sort of now have access to just sort of gain Bitcoin price exposure through a traditional financial markets, right? And this is a sort of a systemic thing that's now being created. Even with passive sort of allocations that occur in portfolios, we're going to see a massive amount of capital just slowly and continually, accumulating Bitcoin for portfolios. While Bitcoin has long been heralded as digital gold, recent developments suggest that it is evolving into something even more significant, Grayscale concluded. A lot of interesting takes here, and I think that there's a lot of on-chain activity as well, more layer 2 and activity occurring on Bitcoin, whether it be the Lightning Network or some of these other things that are happening, whether it be ordinals or inscriptions on Bitcoin. There's more activity that is demanding use of that block space, that limited amount of block space that Bitcoin provides, right? So what does this mean? This means that there will be more fees for Bitcoin miners. And we've actually seen this play out over the past year. We've seen more block space demand. We've seen more activity on chain, and we've seen higher fees for miners, right? So even though you'll have this sort of halving of the inflation of the coin, of Bitcoin, the amount of Bitcoin that is going to be created daily, right? So instead of 900 Bitcoin being produced daily, that's going to go down to 450 Bitcoin. Miners will still be incentivized by increased adoption and increased activity occurring on chain. To take this a step further, I heard, I think it was On the Brink, Castle Island Ventures podcast, sort of discussed this at a little bit of a greater length this weekend with Nick Carter. And I think it's Matt Walsh. They talked about this idea of passive and active and these different sort of tiers of activity by financial advisors, right? Where there's these sort of different levels of, whether companies like, Fidelity or BlackRock will allow you even to buy Bitcoin within an ETF or however through their platform, or whether they won't allow you to buy it, or they will allow you to buy it, but they won't recommend it to you. So right now we're kind of in this there's still a lot of these financial advisors and investment companies that are in this stage of like, they will not allow you to even buy it within their platform. And then there's some that, will let you buy it, but they're not going to promote it to you. They're not going to talk about it. You're going to have to come to them first and say, hey, I want this. And then they will sell it to you. And then there's the final sort of level, which is like, they're going to actively allocate your portfolio to this. They're going to encourage this. They're going to promote it. They're going to recommend it to you. Most of these entities are not at that stage yet, right? Where they're, in a way we call it shilling, right? They're shilling this investment to you. They're recommending you put a portion of your portfolio into that, right? We're not anywhere near that sort of stage of the game yet. But when we are at that stage of the game, that's going to just sort of ramp up the spigot of demand. Let's move to our next story. NVIDIA CEO says tech advances will keep AI cost in check. NVIDIA Chief Executive Officer Jensen Huang anticipates advances in computing over the next few years will keep the cost of developing artificial intelligence well below the $7 trillion that Sam Altman is said to be fundraising. You can't assume just that you will buy more computers. You have to also assume that the computers are going to become faster, and therefore the total amount that you need is not as much, Huang told the World Government Summit in Dubai on Monday. The 60-year-old's company makes the most sought-after AI accelerators, and he's confident the chip industry will drive down the cost of AI as those parts are made faster and faster and faster. I don't know if I'm buying what he's selling here. I think he's got this monopoly, and he's got this huge machine that's sort of just churning and just soaking up capital. And I think that, he doesn't want another competitor to be in the chip game, right? He sort of has this advantage. He sort of has this priority allocation with TSMC, which sort of makes the chips and the most cutting edge chips. And he doesn't really want anyone to catch up. So he's sort of putting this idea out there that $7 trillion isn't really needed, right? But we discussed how much capital is actually needed to create these chip fabs and to create this technology and these one-of-a-kind lasers that can actually create these chips. I think there's just going to be an increased demand for this compute, and I just don't see supply keeping up with the exponential demand. And sure, you're going to have, moderate improvements from generation to generation that will make things better, but the closer we get to AGI and the closer we get to, models that have more parameters, they're going to require better cards, right? They're going to require more data to be trained off of. So I'm not fully buying what he's selling here. Here's another cool story. AI could actually help rebuild the middle class. AI doesn't have to be a job destroyer. It offers us the opportunity to extend expertise to a larger set of workers. I'm actually going to use this tool that I've talked to you guys about. It's kind of a long article here. I'm going to use this tool called Perplexity that we discussed. And I am going to, you guys can't see the little extension, but I'm just going to say, I'm going to ask it, I'm going to say, summarize this page with the 5 main points in bullet points. And this is a tool that I'm continuing to play around with and learn how to implement and use as part of my workflow. So it gave me 5 bullet points about this article. The first one is labor market misconceptions. Despite fears that AI would lead to widespread job loss, the industrialized world is currently experiencing a labor shortage due to declining birth rates, and this trend is expected to continue. The U.S. unemployment rate has dropped to pre-COVID levels, and employment has risen, indicating that there will be more jobs than workers in the future, contrary to the belief that AI will render human labor obsolete. This is an interesting one, right? So as societies tend to get more developed and as people get more educated, they just end up having less kids, right? So we see this happening in a lot of first world countries. We saw, China really screwed up with their one-child policy. They tried to sort of mandate this, and now they're sort of looking at this huge, massive demographic fall off, where the number of people they're going to have in their country is just going to almost be cut in half, right? But just naturally, as technology advances, as society advances, we actually sort of see this lower demographic of people being born, right? People just aren't having as many kids these days. That's just a structural thing that goes hand in hand with, advancing economies, technology, and education. Redefining expertise. Here's our second bullet point. AI is anticipated to alter the labor market by changing the value and nature of human expertise. Rather than eliminating jobs, expertise defined as the knowledge or competency necessary to perform specific tasks commands a market premium when it is both essential and scarce. AI will likely reshape which forms of expertise are valued in the market. Interesting point there. Third bullet point, impact on wage disparities. The wage gap between jobs that require significant training and those that do not is substantial. For example, air traffic controllers earn much more than crossing guards due to the specialized expertise and training required for their role. AI's influence on the labor market could potentially narrow this gap by enabling more workers to perform tasks that currently require elite expertise. So kind of what it's saying here is that it can sort of elevate people to positions that they normally wouldn't be able to do, because it's kind of like giving them all this expertise at their fingertips, right? It's sort of enhancing how people can sort of excel and command higher wages by using AI and depending on some of this crowdsourced and trained on data of thousands of parameters and sort of gain you can almost talk to somebody who's experienced, who has seen all of the data, and you sort of have that almost that little angel on your shoulder talking to you, like some of these large language models can, to sort of help you. I mean, it's by no means a perfect resource, but it will cut through a lot of things. It can help you. You can troubleshoot. You can ask it questions. As you're sort of doing this, your expertise is going up. You're being trained. You're being learned. You're learning as well. Potential of AI to democratize expertise. AI has the potential to counteract the concentration of decision-making power among a small, highly educated elite by enabling a broader range of workers to perform complex decision-making tasks. This could help restore the middle-class jobs that have been eroded by automation and globalization. Interesting point here. I think it's largely hits the nail on the head, kind of touches on what we were talking about before. AI as a tool for augmentation. AI is seen as a tool that, when used effectively, can augment human expertise and enable workers to perform higher value tasks. It is not expected to replace expertise, but rather to serve as a lever for its application, potentially creating demand for new forms of expertise and enhancing the capabilities of the existing workforce. So that was Perplexity's extension tool. It was able to read this whole article and give me the 5 sort of main points behind the argument about how AI could actually help rebuild the middle class. And I think it did a fantastic job there. Let's move on to some tweets. From the Bitcoin Vanguard. When your friends and family start asking you why Bitcoin is up, what do you say? My favorite answer is, it's just math. I love that, right? This idea of something that is constantly being printed and increased in the US dollar versus this idea of absolute scarcity that is Bitcoin, right? There's a reason that Bitcoin historically, the US dollar has lost 99.9% of its value relative to Bitcoin, right? And these fundamental things are going to sort of just accelerate into the future. And it really breaks down to this, right? It's just math. Here's a little interesting take from an interview with Elon Musk and Tucker Carlson's program. I'm not going to play the whole video, but he basically says that, we see no way for artificial intelligence to subvert the fundamentals of mathematics and hash Bitcoin easily. AI cannot defy fundamental math. It can improve the efficiency of hashing, but not crack it. So I think it's a point for people to understand that, you still have to expand that proof of work energy. It can help design better chips maybe to, maybe hash faster, but that industry has gotten so competitive at this point that they've optimized these Bitcoin mining chips so much that, of course, you could probably optimize them further, but you're just not going to see those exponential gains from that optimization of those chips, right? It can't defy math. The chips still have to perform the computation. Next up, America's first nuclear-powered Bitcoin computer mine is online at the 2.5 gigawatt Susquehanna power plant in Pennsylvania. Interesting to sort of see here. So what is the significance of this, right? It kind of goes with this whole idea and concept that Bitcoin miners are location agnostic, right? They can locate anywhere, right? Where you might not want to have a business right next to a nuclear power plant, like Bitcoin miners can go anywhere. They can go in the middle to patch a methane leak, to help stop the flare gas being vented in the atmosphere. They can go to the middle of the desert. They can go to the Arctic tundra. They can send miners almost anywhere in the world, right? Pretty much anywhere in the world, whether it's a remote, hydro facility in the middle of Africa or literally anywhere, right? And nuclear is no exception to that. And this is a way to sort of monetize this nuclear facility when, say, that maybe the base load is low, right? When people are at work, stuff's going on, they have a constant demand to incentivize the production of these projects, right? They have a customer who's going to make it worthwhile for them to expand their energy production at these places. Rip Van Winkle. My friend, this is a kind of interesting post that I read over the weekend, and I wanted to make sure we sort of touched on it. My friend is a 30-year Wall Street veteran who doesn't buy the sky is falling narrative about the US dollar and the impending collapse of the fiat monetary system. The reason he doesn't buy it, because he's been hearing gold bugs talking the same thing about the unsustainable fiscal path we're on for 30 years, and nothing too bad has happened. If you believe the gold bugs, you missed out on some of the largest gains in stock market history. Life-changing wealth was the opportunity cost of listening to the sky is falling narrative. He has a point. The doom and gloom worldview has not served investors well at all. As much as I wanted to tell him this time is different, there's no denying the performance of stocks over the last 30 years. However, when we zoom out and look at the long arc of history, we see that U.S. debt was around $5 trillion 30 years ago. Nations were gobbling up U.S. Treasury issuance, which allowed the U.S. to issue as much debt as it wanted to without consequence. Today, with $34 trillion in debt, $213 trillion in unfunded liabilities, and the largest buyers of U.S. debt starting to diversify into commodities and other hard assets, things are in fact fundamentally different this time. Zooming out helps us to see that every global reserve currency before the dollar had a limited run, which lasted an average of about 100 years. If Bretton Woods marked the beginning of the dollar as the world reserve currency in 1944, then we are nearing the end of dollar dominance if we assume that history will repeat or at least rhyme. Even if you don't buy the doom and gloom narrative, it's fine. You can still benefit from owning Bitcoin because the success of Bitcoin as a store of value does not depend on the total collapse of any currency. Bitcoin is simply the best absorber of global fiat liquidity ever invented. All you need to believe to justify a position in Bitcoin is that fiat currencies will continue to expand. More units of each currency will be printed from thin air in order to reduce the impact of the debt overhang. As they do, Bitcoin will absorb it by trading at higher and higher prices, right? This is the sort of the concept underlying what we looked at earlier, where we said it's just math, right? It's just math. So the message to my longtime friend is that you don't need to be a doom and gloomer to see the value in Bitcoin. Whether the system completely collapses in the next few years or the central banks are able to financial engineer their way out again, it doesn't matter because we know for certain that they will continue to debase fiat money. They have no choice. As our friend Greg Foss likes to say, it's just math. I agree. Warren Davidson, I found this post quite insightful. Let's give him a follow. And the reason I wanted to sort of highlight this post, and because it kind of discusses what's happening with all of the sort of spying, the unconstitutional spying that's occurring as a result of FISA. So let me read you guys this tweet. Last week, the Senate kept the text hidden for a bad border plan. This week, the House is keeping the text hidden for a bad plan to keep spying on Americans by abusing the Foreign Intelligence Surveillance Act. So this kind of touches on just the lack of transparency, right? As a public servant and as the government should be ultimately transparent. Why us as private citizens, we should have the ultimate privacy, right? If you are a public servant or if you are the government, this is a public good, right? So these things should be fully transparent. Whereas if you're a private citizen, you are private, right? And you deserve your constitutional protections, your Fourth Amendment rights, your right to privacy, right? And sort of this right, the right to unreasonable searches and seizures. This is a constitutional right as a private citizen you should have. But what we've sort of seen is just the opposite, right? We expect the government to have privacy, but we as individuals are just allowed to be spied on. The Constitution is allowed to be blatantly violated. In my opinion, it's just absolutely disgusting. They want to keep spying with no warrants, keep buying data that would otherwise require a warrant, expand the spying to cover your local Wi-Fi hotspots, add more ways to expand spying, sprinkle it with a little reform, claim they've reformed FISA. Demand the bipartisan judiciary bill as the base text, requires a warrant, stops federal funds from buying data that would otherwise require a warrant, allows no expansion of FISA, actually reforms FISA to protect privacy and hold violators accountable. I love this. He has another great tweet here that directly has to do with Bitcoin. In November 2022, Republicans had just won the House majority. I had introduced the Token Taxonomy Act 4 years earlier, but couldn't move it with opposition from then Chairwoman Maxine Waters. With a Republican majority, we have now passed major legislation through the Financial Committee incorporating TTA principles to define digital assets, structure the regulatory space, protect self-custody, regulate stablecoins, and ban central bank digital currency. We are still negotiating for votes on the House floor and support from the Senate and Biden administration to make these ideas law. The primary opposition has come from Senator Elizabeth Warren and her worker bees like Gary Gensler. No surprise there. Nevertheless, we are making progress with some strong support from the courts and bipartisan coalitions from industry and in Congress. The Bitcoin ETF is one long overdue example. Now Congress must run through the tape and finish the work. Let's vote. I'm just going to call out the ridiculousness of the SEC. I'll play this little clip here.
Jay Clayton or Gary Gensler, they told everyone in the space, come talk to the SEC and work out your deal. What people found out was there was no escape path. Once you come in and talk to the SEC, you're in endless discovery. And at this point, it's really hard to see how the SEC hasn't engaged in selective enforcement. I mean, they were collaborating closely with the, FTX with Sam Bankman-Fried, and so was the CFTC. Meanwhile, they're going after Kim Kardashian. Like, really? You got Kardashian, but you didn't get this FTX fraud?
It just kind of shows the absolute ridiculous, nonsense that the SEC has been engaged in for the past 4 years. And it's honestly pathetic. Let's go to the next post here. So this was an interesting exchange between, Yellen and Senator John Kennedy. Kind of just discussed this idea. Yellen says, we don't have to get the prices down because wages are going up, right? So, as a lot of you may know, because you've been watching our content here, or you are already a Bitcoiner, you're already an Austrian economist, this idea of sort of the Cantillon effect. And I know we've posted this chart before. What the fuck happened in 1971, right? When you fully, when the U.S. government, fully detached from the gold standard, and they lost any sort of fiscal responsibility to be fiscally responsible, right? There was no check on the government's sort of power to just continually print, and debase, its citizenry, right? So what we've seen is that, the Cantillon effect sort of describes this idea. It's this Austrian economics idea. And I know we've talked about it before. Javier Milei has a great sort of 1 or 2 minute clip that sort of describes it. But it's this idea that when new money is printed, right, who has access to that money, right, first? Who gets that money first now has much more purchasing power, because the shock to the market, the repricing of goods hasn't occurred yet, right? So sort of after COVID, we saw this with, BlackRock buying up all these houses, and then, home prices are up, 30, 40, 50, 60, 70%, right? They got that money first, and they were able to access that liquidity. And then they went into the market and basically bought up all of these commodities and property and real estate before the market repriced those assets with the new reality of there being way more money chasing the same amount of goods in society, right? So those people benefit first, while the last people to benefit, right, are the people that are the workers and the poorest people, as the wages are the things that stagnate the most, because all of the goods, everything has to sort of get repriced, right? And it's not on the business owners or anything like that. They are also, getting screwed. They're learning that, oh, wow, now all of my supplies went up a lot. Wow, I have to pay more for all these supplies. And then they're sort of lagging to sort of reprice all of the items that they sell in the store, right? And people are unhappy to see all of these goods. And, why is food going up? Why is rent going up? Why are all these things happening, right? And they blame the business owners, right? Hey, this is perfectly illustrated by Joe Biden coming on at the Super Bowl and sort of talking about this nonsense about businesses, raising prices on this good or that good, like talking about, it's the businesses that are doing this. Like, no, you guys printed all this extra money, and you didn't just magically create all this new wealth and goods and commodities and items, right? We had the same amount of real estate, we had the same amount of goods, right? You just basically stole people's savings and gave it to the cronies, the people that have access to the money printers, right? Big banks, big organizations who can get that money super cheap right after the Fed sort of presses a button and creates trillions of dollars. They get the access to that money first, and then they can go out and spend it, right? So these are sort of effects. It's like when you're a drug addict, right? You get your high, and then there's consequences the next day. You feel great initially, and then you've got all these consequences that sort of deal with you artificially trying to control the money supply, right? It's like we use capitalism for markets and pricing. Why wouldn't we use the same thing for the most basic good in society, which is money, right? So the Cantillon effect really sort of delves into that, right? Sort of talks about this, that sort of the last signal of the market is people getting paid, people making their wages, right? They're having to suffer the consequences of, this record high 50 to 60 year level of inflation that we're seeing right now, but their wages haven't gone up to compensate for that reality, right? So that's kind of what's being talked about and discussed here. I'm going to play this quick clip of Ray Dalio talking with Lex Friedman.
The evolution of Bitcoin over the years is one of the things that has influenced changes in my view. It has proven itself something like 10, 11 years ago. Imagine the programming of this, and you throw it out, and that's the idea. It has not been hacked. It has operated. It is built. It has come an amazing way over that 11 years to be maybe probably the most excited topic among a lot of people, and has been used and is now has obtained the status of having imputed value. At the same time, it is one of those assets that is an alternative money. I think we're entering an era where there's going to be a competition of monies because of the printing of fiat money and the depreciated value.
I think Ray Dalio is one of the greatest macro thinkers maybe of our time, right? So I sort of watched his development to fully sort of grasp and understand Bitcoin. And I don't think he's still not quite like fully there yet, but I mean, I think this is like, he is starting to really grasp the big picture here and to sort of see what's happening. And he kind of says there's just going to be this competition of monies, right? And I think we're entering the very, very early stages of that, right? So people are waking up, people are realizing. And one of the biggest innovations of Bitcoin, in my opinion, is this idea of absolute scarcity. I know I've said that many times, but I don't think the world has really grasped that yet and really fully comprehends and understands that true digital scarcity. Let's move on here. Think about it. No government ever declared gold as money. Gold emerged as money all over the world because of its properties, and then governments had to use gold in their own currencies in order to give their currencies value, right? So interesting little statement to sort of unpack there. A little thought experiment when you think about what is money, and gold was one of the most successful monies in human history. Why gold? Why was gold better than silver? Why not copper? Why did gold really have this place at the sort of the top of the money pyramid, right? It has everything to do with its fundamental properties and its stock to flow and all of these other monetary properties it has, right? So very interesting to think about. Let's move on here. Rip Van Winkle. Bitcoin is the underlying asset. Unlike fiat money, which is debt, a liability of the Fed, Bitcoin is not debt. Why does it have value? Easy. It solves problems. Bitcoin has zero counterparty risk. It knows no borders. It can never be debased. It can never be confiscated. It can't be censored or sanctioned. It's divisible into 100 million units. It can be sent anywhere in the world at any time with final settlement in an hour. It exists outside of the existing fiat system, which is on a completely unsustainable path. This is why Bitcoin is the best performing asset of the last 5, 10, and 15-year periods. I think you'll be challenged to argue that these benefits aren't valuable to billions of people on this earth, but I'd love to hear you try in the comments below. I think that's just a great follow-up to what we just talked about. It just sort of describes Bitcoin, why was gold so successful? And now you see Bitcoin, and it sort of solves for even the problems that gold had and makes this sort of perfect money in a way. And these are a lot of the fundamentals underlying Bitcoin that he described. Let's move on. Alex Gladstein, here's a post. The second best performing asset on this list is also the only one that A, anyone on earth can use, no KYC or passport or minimum income level or bank account or political obedience required, and B, can teleport in minutes to anyone, no questions asked, no censorship possible. There's a little post about the best over the last decade, what the best performing assets are. It has NVIDIA listed here as, over the past 10 years, the best performing asset. Since Bitcoin's inception, though, Bitcoin is the best performing asset in human history, right? NVIDIA, Bitcoin, AMD, Tesla. Those are like the best performing assets of the past decade. Here's a post by our company that we did the other day. 5 years back, Bitcoin was at $4K, 8 years at $300, and 12 years ago at just $5. Now, facing hard economic times, it's hit $50K. Could it dip? Sure. But it's important to look at the bigger picture and historical growth. Reflect on that. The reason I highlighted this post is just to we have a local meetup group that we talk to, and for the past 5, 6, 7 years, I've been telling everybody dollar cost average is the best way to allocate. Right? If you want to come in and have an initial allocation, if you've got fiat that you want to say, hey, I have zero exposure, I want to just sort of get to 10% exposure in my portfolio or 5% or whatever that percent is, make that initial sort of purchase, and then after that, make an ongoing dollar cost average purchase. Right? Because the value there is going to be volatility there as the market sort of prices this asset over the coming years, and there has been over the past decade or 15 years, right? But dollar cost average, pick a monthly or weekly or biweekly amount, whether it's $10, whether it's $50, whether it's $10,000, whatever that number is for you, and stick to that sort of accumulation and that strategy, that dollar cost average strategy. Cool tweet from Pete Rizzo here. Satoshi Nakamoto explaining why Bitcoin would beat central banking at $0 exactly 15 years ago. The world was never the same. The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. And finally, I'm going to let you guys out with this thought and this idea to sort of expound on this idea of absolute scarcity. Wall Street ETFs are buying 12.5 times more Bitcoin per day than the network can produce, increasing the demand and price. And I think you're starting to sort of see the slow, steady bit of that occur. And, when the halving occurs, it's going to be 25 times more Bitcoin per day than the network can produce, increasing the demand and price, right? So this is really the underlying idea of kind of when I said people overestimate this whole thing in the short term, but then they underestimate how impactful and powerful this is in the long term, right? Because we haven't even really seen a lot of these ETFs and stuff and different financial companies actively selling and recommending this product, right? They're just allowing access to it right now. They're not even actually recommending it just yet. But as it continues to outperform everything in the market, it's going to be essential for people to have an allocation to Bitcoin in their portfolio, right? And remember, there's only 21 million seats on that boat, right? So it's interesting to see how it's going to play out. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.